Hello traders, good morning. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. We're here one day later than usual and we'll only have one video this week due to a short trip that I'm making. But anyhow, here it is, my update on the euro dollar 1 hour chart. So we got a bullish bounce as expected here at 120. We had a bullish momentum visible at that support zone right here, followed by a lower high, and more importantly, a break above the 20 MA, starting the reversal basically and bounce off of that 120 support zone. So that was the reversal process. I think we had a video on Wednesday, which is probably the 5th of May, somewhere in here. And you can see that I was talking about a break above the 50 fib on a 5-minute chart. We easily got that break above that resistance, indicating the end of that downtrend. All right. In that case, we had probably an ABC pattern rather than a 5-wave. I was thinking it was a 5-wave pattern, to be honest. 1, 2, 3, 4, 5. But because the price broke above this top, it's probably an ABC pattern like this. 5 waves here, a B for a wave A B here, and another 5 waves here for a C. Now, in any case, we were expecting the upside. We were expecting the ABC up, right, to test the previous tops here at 121. Price actually went further than that. So it did a lot more than in ABC. It was even more impulsive. But in any case, in both scenarios, we're expecting upside. In both scenarios, a break above the 20 MA is good. In both scenarios, a break above the 144 MA is good. And in both cases, a bounce at the 21 EMA is good. So there was plenty of reasons to look for trades up to at least 121 in my view. In this case, price even exceeded that target and went up to 121.75 and broke the top. So in this case, my wave analysis was not fully correct. It was certainly partially incorrect, but ultimately it didn't matter because both analyses were indicating an upside direction, just a little bit different target, and this moved up a little bit more impulsively. But we did get the higher low, as I indicated here. The inverted head and shoulders played out as expected. Strong momentum away from the 20 MA zone, break above the 144 MA. All of that confirming the upside, and that's all I explained basically as well in the SWAT course, of course, and ebook. SWAT standing for Simple Wave Analysis and Trading. So a lot of that information is explained, or all of it is explained in the course or ebook. Ebook is available for €24.95, €24.95. All right, now what? So it looks like this 5-wave pattern is finished, but we cannot rule out that it's a wave 3 and this is a wave 4 for another wave 5. So one way we can rule it out, or one way we can measure that, is by placing the fib on this price swing here. If this is a wave 3 and not a 5 wave, then price could bounce at the shallow 23.6 fib or the 38.2 fib or even the 50 fib. If it does that and it bounces, it could head towards the minus 272 target at 122.25 or even 122.50 and make one more higher high. So that's key. At this moment, price is below the 20 MA zone. So I think it could break to the downside and retest these fibs. If it bounces and rebreaks above the 20 MA either after the 38 or immediately, there could be one more higher high possible. All right, because in this case, looking at the 4-hour chart, I think we're looking probably at a wave 5. This being a wave 3, the bounce at the 144 MA now looking more like a wave 4 at this point. Like this, 1, 2, 3, 4, 5. All right, so it changed a little bit because I thought that the 5-wave pattern was finished here of a wave A, and this could be wave B up for wave C. That's not entirely impossible. It just seems less likely at this moment to me. It's still possible because of the fact that price did go to a 38.2 fib, and that could be enough for wave B. In that case, if we're making an ABC correction like that, it could just immediately finish the wave C as well. So I think this is not too important at this moment. Both scenarios are possible. I don't think we need to spend too much time on that. More importantly is this fib zone, because if it bounces there, it could be part of the wave C or part of a wave 5. In both cases, it's looking bullish and it will make probably one more higher high towards 122.50. That's really the most important thing aspect in this analysis. All right, if it breaks below that, and it breaks specifically below the 21 EMA zone, then I think we're looking at a bearish push lower, and I would put the fib on the entire swing, like this. And in that case, I think we're looking at a push down to the 38, a bounce, and then a re-break below towards the 61.8 fib. Then in that case, I'm expecting a bearish ABC pattern, similar to, or the same like last week, and then a bounce again at the 61.8 fib. That piece of the story still stays the same, in fact, for the euro dollar. So whether this is a wave 5 or C to the upside, not so relevant at the moment. In both cases, we're expecting ABC pattern down. The main difference is if this is a wave C up, we're expecting a big ABC down. Whereas if we expect a wave 5 up, in that case, the ABC might be more limited to the 61.8 fib. Okay. Whereas if it's a ABC completed, there could be a 5-wave pattern down towards the previous bottom. So it could go much deeper, in fact. Whereas if it's just a 5-wave completed, it could be an ABC pattern towards the 61.8 fib. With a wave C completed, it could be a 5-wave pattern that goes way deeper. So that's the main difference, is the depth of the bearishness afterwards, and in how many waves, 3 or 5. But in both cases, we're looking, at least, from the wave perspective, we're looking for a bearish decline, either immediately or after one more higher high, depending on how price responds to the 38 and 50 fib zone here at 121. Okay, this downside seems likely at this moment. Question is, how much will it move down? Will it be very impulsive and break through those fibs? In that case, it's looking bearish. Or will it bounce? In that case, a higher high is likely before we get that bearishness. All right, but in general, as you can see, you're looking for dollar strength eventually in the near future. Pound USD, same thing. I think this is a very, very high and strong resistance zone, and we can see price already falling. It looks weak to me. It was very strong, obviously. It did break to the upside. We had a slight preference for the upside break, if I remember correctly, or it was maybe 50-50. In any case, what matters most is the fact that it broke above the resistance trend line with this candle. That's the indication of a strong breakout when looking at the candlestick, or this candle when looking at the steeper trend line, in fact. And we had a good breakout, a good impulsive push higher towards the Fibonacci resistance zone, and I think that was a great breakout trade from 139 up to 141.50, 139.50 for about 200 pips, I believe. So very nice push above the triangle resistance and the 21 EMA zone, right into that deeper Fibonacci levels. The 61.8 fib was already hit, and price bounced there. So it was logical that price would go to the next fibs at 78 or 88, and price did that. So I think that was a pretty good breakout trade. In fact, I was not a big fan of the pound USD in this zone, whereas where I have the blue X, I was not looking for any interesting trade setups there. The breakout was something that I was really waiting for before trading anything interesting there, and I think that certainly did happen when we got the breakout. Now that price is in this resistance zone, I do think it's going to be a lower high, and I do think that there's going to be a bearish bounce. I'm bearish at this moment. Despite the bullish price action, I think that a reversal is more likely, and I think with the 21 EMA zone break, pullback, and bounce pattern, at least down to the 144 EMA at 140, if not even further, if not even maybe below, let's take a look at the daily chart, maybe even down to 135, but it would have to break below this 21 EMA and the support trend line, of course, at 139. So for the moment, 140 then 139 are the main targets. It could make a small bounce there. If it breaks through that, then it could even move further to 137 and 135 if it makes this bigger bearish red A, B, C pattern. But I'm taking it step by step, of course. Reversals are always risky. This is a reversal, so it's certainly more risky. First target 140, and then we'll have to see how it responds and if it could break through the support for further downside targets. That's it for today. We'll be back next week with more webinars and videos. Wish everyone great trading and see you soon. Cheers.